It's Friday, the 5th of November 2021. Welcome to the Fear and Greed Business Headlines, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
5 stories, 5 minutes. Let's get into it. Story number 1. In financial markets, inside businesses, and around pay negotiations, the potential for inflation, Sean, is dominating discussions. And yesterday, some big companies said price rises were hurting earnings, demonstrating that inflation is hitting the real economy now.
It sure is. In Australia and globally, it's all about inflation at the moment. Is it transitory or something that's here to stay? Yesterday, Domino's share price fell by more than 18% after the group came out and said high food costs and high energy costs meant it couldn't provide a short-term forecast for earnings, which is very unusual for the pizza maker. Building Group CSR said the time taken to build new houses is longer because of disruptions in supply chains, labour shortages and cost pressures, and it warned there'll be more increases. Food Group Ingham's warned that sustained cost pressures had the potential to hurt earnings. In its case, feed costs, notably grain, was hurting, and investment bank UBS put out a note warning that cost pressures could really hurt online retailer Kogan.com. We know the Reserve Bank seems pretty calm about potential price rises. We found that out on Tuesday, but I tell you what, there's a lot in financial markets and a lot in the real economy who disagree and say inflation is here.
On to story number 2, and Sean, you mentioned Domino's, but really that was quite a tumble yesterday. We're going to cover it twice today because it looks like all is not quite so rosy in the pizza world.
Domino's had been one of the best performing stocks in the market until about the middle of September. It then trended lower on concerns about inflation, and as I just mentioned, those fears were confirmed yesterday. Domino's wants global domination, basically, or at least outside the Americas. It's got all sorts of businesses across Europe and Japan and Taiwan. Japan had been growing fast, allowing Domino's to open lots of new outlets, but sales in Japan are stumbling. And inflation in energy and food costs are certainly hurting earnings. Not helping also is the fact that the Australian dollar is rising. Now, CEO Don May is very enthusiastic. He said there were short-term challenges as the world learnt to live with COVID-19. But investors aren't impressed what they're saying.
All right, story number 3 this morning. We have known that retail have had a bad few months, but did we know it was this bad? Retail sales had their worst quarter on record in the 3 months to the end of September. No surprise, Sydney and Melbourne dragged down turnover.
Yes, according to the Australian Bureau of Statistics, sales were down 4.4%, which was much worse than during the 2020 lockdowns. It was discretionary retailers that suffered most: cafes, restaurants, takeaway food services, clothing, footwear, department store, household goods, that type of thing. While we know it was a bad quarter, what's significant is that it suggests that the current December quarter didn't start too well either. And unlike what's being reported at the moment, there was heavy discounting during the September quarter as retailers tried to move stock. Retail inflation basically was non-existent back then.
Okay, story number 4. I like this one. The competition regulator, Sean, has cleared the way for beer giant Lion to buy brewer Fermentum and its Stone and Wood brand. What's happened there?
Well, the big question was whether Lion's craft beers, and that includes Kosciuszko Pale Ale, White Rabbit and Little Creatures, were considered mainstream or craft. The competition regulator came up and said that mostly they're mainstream, but there are plenty of other craft beers out there in the market. So it actually allowed Lion to buy Fermentum, which, as you said, owns the Stone and Wood brand. Now, Michael, you're a Kosciuszko Pale Ale man, aren't you?
I certainly am. I've been a fan for a very long time. When it was a craft beer, I followed it into the commercial world.
Is that right? In cans, though?
No.
On tap?
Well, yes, always best on tap, but really I'll take it however it comes.
Fair enough.
All right, story number 5. Sean, I know you are big into your celebrities and your celebrity news, and celebrities have brought a bit of star power to the COP26 Climate Summit.
About time. About 30 celebrities, including Leonardo DiCaprio, Cher, Cyndi Lauper, who I like to say Lauper, Michael, but I think her name is Lauper, Ellen DeGeneres and Pitbull have backed a United Nations campaign to urge leaders to accelerate achieving climate change. Now, the entertainers used their social media accounts to encourage change and alert their followers of what was going on in Glasgow. I think that's a really good use by entertainers of their massive social media followings. Good on them.
It's a very 2021 approach, isn't it? If this had happened 20 years ago, they'd be putting on a global concert.
I think that's right. Bob Geldof was nowhere to be seen.
All right, that's it. The top 5 business stories in 5 minutes. Thank you very much, Sean.
Thanks, Michael.
It's Friday, the 5th of November, 2021. Remember to hit follow on the podcast. And if 5 minutes isn't enough, then you can find our longer podcast called Fear and Greed on your podcast platform. You can always find more information and plenty of interviews at fearandgreed.com.au and sign up for our free daily newsletter. I'm Michael Thompson, and that was the Fear and Greed Business Headlines. Have a great day.